Good morning, everyone. Part 2 of 3 great interviews this morning, live down here at TCS Property Management on a rooftop deck at 2nd and Chestnut. My name is Joseph Scarice, co-founder and co-host of the Creative Bird Strategies podcast, along with Yardell Perkins of Perkatech, our social media strategist and administrator of all our background work, video work for our ongoing podcast. We're typically every Sunday morning, 9 a.m. Eastern Standard Time. And we also do guest speaking discussions or mastermind discussions every second Saturday of the month at 10 a.m., 11 a.m. now, and 12 p.m. And we have another great guest here this morning. We're live right now on maybe about 250 Facebook groups, YouTube, and all kinds of. So if you're not supposed to be here, Nancy, you're in a lot of trouble. So I have Nancy O'Brien with Jumpstart Lehigh Valley. I've known Nancy for a little bit from back my first trust days, but I am actually a nationwide direct private lender now with Park Place Finance, senior account executive, and I ran into Nancy just recently and thought it would be a great time to have her out here and discuss what's going on with her and Jumpstart Lehigh Valley. A little brief overview, who you are, what you do.
So I'm Nancy O'Brien, and I'm the director of Jumpstart Lehigh Valley. Jumpstart is a program that was originally founded in the Germantown section of Philadelphia by developer Ken Weinstein, and it helps people who are interested in becoming real estate investors in their own communities. It helps them by offering them training, mentoring, and paths to lending, and networking and other resources around the community so that they can get their businesses started.
So from teacher to investor, learning real estate without blowing up your finances, how new investors can master deal analysis and underwriting and forma modeling without risking the real capital. Ken's built up a pretty solid foundation to all the Jumpstarts. Why did you pick Jumpstart to do what you're doing now?
So I, as Joe is saying, started in my career as a teacher, a high school teacher in Philadelphia, and it was a very rewarding career. I was doing that for about 10 years and transitioned into real estate pretty organically or naturally, just bought my first home, bought a duplex, and turned my old home into a rental, turned one side of the duplex into the rental and lived in it. And I just started getting more and more interested in real estate and was transitioning into it when I happened across Ken Weinstein at a meeting and got to talking with him. And that was around the time he started the Jumpstart Germantown program. And I ended up working in Ken's office at that time and helping with some of the logistics for the original Jumpstart program. And I came back to the Jumpstart program during the 10-year anniversary celebrations of Jumpstart Germantown, and kind of revisited it and thought about, what sort of an exciting chapter of my life that was, being part of that. And it's really been expanding. It's been adopted by, I believe, 24 other communities, and I thought it would be a great time to expand it up to my new home in the Lehigh Valley area.
Yeah, I used to live in the Lehigh Valley, so I have a lot of ties to that. I was actually have mutual family members. We own properties up there at one given time or another. I've owned properties there at one time or another since 2007. So I've been there before the Renaissance and now the Renaissance. And I actually talked to one of my cousins who owns a bunch of buildings down at the Circle in Easton just yesterday. So, but getting to the biggest beginner mistake, where are you seeing that, and where do you think that could tie into Lehigh Valley and you and Jumpstart Lehigh Valley?
So some of the biggest, I was very lucky, I should say, and when I started in real estate was well over 10 years ago. The market was easier. It was easier to pick up properties at a price that was forgiving. The market is not forgiving these days. So one of the biggest things that I stress, I'm also a mentor for the original Jumpstart program, as well as starting my Jumpstart Lehigh Valley program. So one of the biggest things I'm stressing, both to the people I mentor for the original program and in my new Lehigh Valley program, is that it's really important to have a very good understanding of your numbers. I should say I was a math teacher, so of course numbers have always been close to my heart, and that was one of the pieces that I picked up, more quickly when it came to learning the real estate business, was how to run a good pro forma, how to look at your spreadsheet. So some of the biggest beginner mistakes, I think, are underestimating your expenses, particularly your carrying costs for rentals and your construction costs. People like to be very optimistic about the rents or the resale prices that they are going to get, which, good to be optimistic, but when you're writing your pro forma, you want to be conservative in your estimates. You always, if you are running a construction project, always want to leave a good contingency budget. I know you touched on that in your last interview. 15% is a good, base point for construction contingency budget. So meaning if you're planning to spend $100,000 on your construction, budget $15,000 for what you don't know is going to happen until you get into it. I do want to mention one mistake that I remember Ken Weinstein warning us all about is do not fall in love with your properties. I know it's Valentine's Day. We're familying on February 14th, but try to save your love for that special someone. Don't fall in love with your real estate properties. You want to look at it very objectively and not be so moved and so eager and so in love with this property that you turn a blind eye or make projections that are too optimistic. So.
Yeah, I think the class and the framework what Ken teaches is great, and it definitely gives you a small base, but there's so much more to learning about before leverage. You know what I mean? How can someone realistically learn underwriting and deal analysis without putting real money at risk? Now, I know that answer because I teach a class on that, but how are you going to do that at Jumpstart Lehigh Valley is the question.
Well, I am going to teach a section just on running the pro forma. The other thing that's good about the Jumpstart programs is that after people graduate, they're paired with a mentor. So I know, not too long ago, my one mentee, a little shout out to Mia Bowie, who's with Keller Williams Mainline. She was looking at a property. She said, hey, could we hop on a Zoom call? We sat down and ran the pro forma together. So that way she's getting somebody who's experienced who can kind of look over her numbers and say, this is what this means, this is a realistic number for this, and go through it. And one thing I should say is that I was actually very proud of my mentee, Mia, because she, I don't like to tell people what to do as a mentor. I like to give them information and then let them make their own judgments. And she really did like this property. It looked promising on the surface, but when she dug into the numbers, she made what I do think was a good decision probably to pass on this particular property because the numbers were just too tight. And I know she felt a little disappointed, but I was actually very proud because it meant she was disciplined in looking at her analysis and knowing when, this just wasn't the one. And so now she's on to looking for the next.
So if you were teaching a beginner today, what are the first 3 numbers they must learn to analyze before anything else?
True operating costs, not guessing, really dig in, even call an insurance broker and say, hey, what's it gonna cost me to insure this property?
I think builder's risk is a lot different than stabilized insurance. So you got a big gamut there, and then, I just want to add one thing. Do you advise anybody hey, listen, if you're pulling permits, that's going to change the tax base to this property?
No, I haven't thought about that, but now that you mention it.
If you pull permits, who do they notify? Tax assessors department.
Right.
So Lehigh Valley is big on pulling permits for electrical, plumbing, and HVAC. You can't work around that. Those towns will squash in a split second. Philadelphia, anywhere.
Yeah.
So if a permit's pulled, they're notifying the tax assessor's office. So how would you now, knowing Lehigh Valley, taxes are not bad, but they can go up 20-30% with a new tax assessment.
So I would say now that you've given me this good idea to add this to my pro forma personally goes out 10 years. And so I account for mostly appreciation in my rental income, also appreciation in the expenses. So I might just put in year 2 or 3 a jump in your taxes if you've done a huge
that's if you add a bathroom or if you've
done a huge renovation, then I think that makes sense.
Are you suggesting to your mentees not go heavy into renovations? Like,
I'm not necessarily suggesting that. It depends. A lot of people come into Jumpstart programs. They might have a background in the trades. They might have a background in construction, or maybe they have, a close friend or family member. I personally did not have a background in construction. I just jumped headfirst into it anyway. But I was just very careful and proactive in understanding the construction process and talking to and learning from my contractors. So I wouldn't necessarily advise against a big construction project. It's hard to find properties that are really going to perform well for you without being willing to take on some construction.
So how should new investors practice building pro formas so they understand cash flow reserves and downside risk?
Well, we talked about the pro forma, so you can go, to on my website or any of really the Jumpstart websites, you can download a sample pro forma and just start looking at some properties on the MLS. I've also been working as a side project with a cousin of mine who does app development. My cousin James, he is a business executive and works on app development as his kind of side project. And we've been putting together a game that's a real estate simulation game, and it lets you look at sample properties and kind of walks you through the process of evaluating those properties and gives you some guidance on how to fill out a pro forma. And the idea is you see which of these properties I would buy if they were real properties, which of them I wouldn't, and then it runs a little simulation to see how that performs over time. So it's a work in progress. You can check it out at DealBreak.com. But as I said, it's work in progress. So that is one method. You can download our sample pro formas online, go into the MLS, or go evaluate some wholesale deals. And again, if you're out there evaluating real properties and you come across things that don't work, don't feel like a bad in not having found a property that worked on the first shot. That's really your classroom. That's your room for practicing, trying it out. And those deals that don't work, you learn more and you practice your pro forma, and you move on to the next.
I might extend you a gift.
What's that?
I'll give you my pro forma.
Oh, cool.
The actual lender's pro forma.
I would love that.
Yeah, so then they really can't screw up. Well, if they do, then they're in a lot of trouble. So, but my pro forma is really the determining factor. Are they going to get what are they going to get funded? I mean, your pro forma is kind of more from the real estate investor perspective. So I'll be more than happy to provide that to you.
Yeah, that would be great. I could post it.
Yeah, I think one will be on fix to rent, fix to flip. One will be on ground up construction, which I'm not sure if you're going to touch on that, and then DSCR, the exit strategy, if need be. So risk versus hype. Social media often glamorizes fast flips and rapid scaling. Everybody's a Facebook legend in their own mind. How do you help people separate education from entertainment or bullshit?
Well, social media, it doesn't really matter what the genre is, whether it's people posting their vacation pictures or posting their real estate shots. They're kind of showing the fun part, they're showing the glory, they're not showing what didn't work out, they're not showing, the sad night they spent eating a bowl of Cheerios on their couch. They're just showing the sort of highlight reels and the fun moments of their life. Real estate is no different. So I don't think that that's a good place to get education. You do want to look at a program like Jumpstart, look at whatever your local investor meetups are a great place to get education. Make sure you're getting your information from real sources and not people who are trying to build their social media followings.
So simulation learning. Can analyzing 50 to 100 deals on paper actually prepare somebody for real acquisition? And what should they be tracking?
So I would actually, as much as, I'm a numbers person, I would say no. Analyzing deals on paper will not prepare you for real acquisition because real estate investing requires a lot of skills. It's not just one skill. You have to be at least somewhat good at a lot of different things, right? Like you have to understand the construction process. You have to understand the property sourcing process, the tenant management aspect of it, what buyers are going to want if you're reselling properties. But what analyzing properties on paper can help you learn is your financial analysis. And that is only one of the skills that you need, but it is one of the most important skills because if the number doesn't work, it doesn't matter how good you are at any of those other things, your property is not going to work. So it's one of the most important skills, and yes, analyzing deals on paper can help you with that aspect, that skill.
Understanding financing. How important is it for new investors to understand lending structures, DSCR, bridge, amortization, reserves before making offers? I mean, I'm a fan of that, but I had to throw it in there.
Understanding financing is very critical. It's part of understanding the entire financial picture of your real estate investment. So taking on debt increases your risk a little bit, or a lot, depending on the nature of the debt and the nature of the project. Just, as an example, if you thought your construction project was going to take 2 months and it takes a year, well, now you're paying interest on your loan for 10 more months than you might have budgeted. So you really want to understand what the nature of your debt is, what the interest rate is, what the payment's going to look like, understand the different types of debt that you can take on, like a construction loan versus an acquisition loan, understand the reserve requirements that the bank might or lender might require from you, and understand how that's all going to play out in your real estate financials. Taking on debt does elevate your risk. It also can elevate your returns. So it's not something you want to ignore or avoid, but you just want to know kind of what balance makes sense for what project in terms of how much debt to take on.
I'm going to give you another gift.
Yes.
I'm going to send you the checklist, that standard for fixed to rent, fixed to flip, and DSCR submissions.
Nice.
So you can provide that to your mentees.
Excellent.
I'm gift giving today. Isn't that amazing? I'm just giving things away. You know what I mean? So that ties into the power of mentorship. What role did mentorship play in your journey? And how should new investors vet mentors properly? I think that's a good question, actually.
So mentorship played an incredibly important role in my journey. My original mentor probably was Ken Weinstein, because as he was developing that original Jumpstart program, I was one of the sort of guinea pig trainees.
Yeah, you must have been right from the beginning. Because when you and I had dealings, it was like 10 years ago, right? Mm-hmm.
Yeah, 2015 it started. And so he was sort of the mentor to the original class of people, and then the program grew so large that he started asking other people to come in and volunteer and mentor, and I was formally assigned a different mentor through the program who also helped me. And I would say also I've gotten a lot of mentorship in smaller aspects from a lot of different people along the way. I would include contractors in that group, because I would just hang out on the construction site and pester them with questions, and I was fortunate enough to have contractors who were articulate and nice enough to stop what they were doing and explain things to me. I would consider them among my mentors. Even lenders have provided some amount of mentorship to me, just in explaining how the financing aspects work. So it's been an incredibly important part of my experience in becoming an investor, and that is a big part of what inspired me to start Jumpstart Lehigh Valley, is the idea of taking what I've been given in my past and paying it forward, because I cannot necessarily pay those people back, but I can pay it forward to the next generation of people out there.
Got it. Emotional discipline. How do beginners avoid emotional buying when they finally feel ready to invest?
Well, we touched on already, try not to fall in love with your properties.
Fall in like with them, not in love.
Yeah, fall in like. Yeah.
I learned that when I was 16 in a sex education class.
Okay.
You're in like with somebody at 16, not in love.
Makes sense. So just some practical steps you could take: write down clear criteria you have in your mind before buying. Get an idea of how much construction you're willing to take on, what your price range is, that kind of what neighborhoods you're interested in, and take some time to write it down. Look at what return you think is appropriate for your investment strategy. Write that down too. Run your pro formas, and you've got to live and die by those numbers. So if the numbers don't work, just walk away. And be patient. Just be a little bit patient to find the right deal. You're not doing something wrong if you haven't found a deal within a certain amount of time. It's better than moving forward on the wrong deal.
Yeah, and this next question ties in because I'm very privy to Lehigh Valley, so I know the market extremely well. From where to and Lehigh Valley has expanded. My Lehigh Valley and your Lehigh Valley is now Lehigh Valley is up to Lehighton, they claim, and out toward here and out to there, and they're even trying to grab the Poconos as part of Lehigh Valley down 33, which is quite ironic and funny. But for someone in the Lehigh Valley region, what should they analyze about their local market before purchasing?
So if you are a buy and hold investor, it's good to understand the price to rent ratios and neighborhood level trends. Another thing to look at is where people are going to be working. So look at what factors are driving employment in the area. And where, especially if you're buy and hold, where the long-term housing is moving. I also want to say I do strongly believe if it's possible for you, I believe in people investing in their own communities. I think that they make better investors, they make better neighbors, and they make better community members. Not every neighborhood that you happen to live in is the most investor friendly. It depends on your situation. But if at all possible, it gives you such a competitive advantage to really have that, particularly in an urban area, to really have that block to block knowledge of where you're living. Just what's the vibe on this block? Where do I buy my groceries? Where is the train station? Just sort of the recent history of that area. Living in an area gives you knowledge in a way that it's hard to replicate from the outside. And I would also say when you're investing in your own community, it gives you returns not just financially, but also personally, because you and your investment portfolio and your community are all kind of growing and together. And it gives you an opportunity to benefit from that long-term growth and to do the same for your neighbors.
Yeah, I think ABE is definitely Allentown, Bethlehem, Easton. There are definitely 3 different engine blocks. They run on their own different engine blocks, and it really depends on your comfort level and who's in your team. Who's your property management, and who's going to maintain these properties with you if you're going to hold them. And then with the Eli Lilly announcement just recently, that's 2,100 jobs coming in for construction, then 850 permanent jobs. So that's going to be very interesting in that Bethlehem market more so. And Easton, I think, is kind of feeding off of North Jersey, Northwest Jersey. I feel more so than ever before, but because people just want to come over the other side of the river, save money on taxes and standard of living and stuff like that. And also, education's real intense in Lehigh Valley, where you got to be in the right areas. So, I do agree with you that. What's a couple of favorite spots for you, like that you like? Where are you looking at?
I am always looking. I haven't been actively buying since I moved to the Lehigh Valley, just for personal family reasons. I have a small child at home.
They move around pretty quick, those kids, right?
Yeah. So I've been chasing her around. But I am interested in Allentown. I'm interested in kind of watching what that does. I didn't even, when I moved there, understand how expansive Allentown is, like geographically.
Yeah, exactly.
Like it just keeps going and going.
Yeah.
So I'm trying to get to know those corners a little bit better. And likewise, Bethlehem, like some pockets around the universities and things like that. We're looking.
The South Bethlehem area is very unique.
Yeah.
I think between 12th and 19th in Allentown still has some room to play around with. And then, those the surrounding boroughs of Allentown and Bethlehem are always interesting. So why should new investors focus more on preserving capital than maximizing returns in their first few deals?
So I think it's important, we've touched on really understanding your construction budget and your true operating expenses, being conservative in your rent and resale assumptions. It's important in those first couple deals to get some early success, even if you don't necessarily want to expect that you're doubling your money overnight or anything. That's not a realistic expectation, but try to put a floor under your risk and sort of minimize and control your risk in a way that lets you have a little bit of room for upside on those first couple deals, while kind of playing it relatively safe, I would say.
So building analytic confidence, what habits build underwriting confidence? Spreadsheets, mock scenarios, rent comps, construction budgets?
Yeah, absolutely. So one thing when I am, particularly if I'm looking in a new area, so as I was saying, Bethlehem and Easton and Allentown markets are new to me. So trying to get to know those better, one aspect of that when I run my pro forma is to spend some time. I just go on Zillow and I pretend I'm a rental shopper, and I look around and say, would I pay $1,500 for this apartment over here when I can get that one over there for $1,600? So really trying to understand kind of at a micro level what those comps look like. You can work with construction budget templates alongside working with your pro forma. So the pro forma that I posted does have a little bit of room to write a rough construction or sort of a outline construction budget, and then I have a construction budget estimator on my website as well. And then running mock scenarios in spreadsheets or in a tool like our simulation game that we're adding are ways to kind of get some practice and get some confidence. And another thing I've touched on, but people really, if you find the right person, they'll be happy to give you some advice. It's worth spending some time to be out there networking and talking to people who are experienced in the business or joining a program like a Jumpstart program, and just asking questions, and don't be afraid to come across like you don't know something. Just ask. People are happy to share.
There's nothing wrong with being humble.
Yeah.
Nothing,
No, it's great.
It's
because
great.
That's your free, your opportunity for free learning in the school of life.
I mean,
there.
look, I threw you out in front of my holiday party with 125 people in a room.
Yeah.
I didn't think about it. Just like, hey, just talk like what you're going to talk about, and you did fine.
Yeah.
And you didn't know any of those people.
Yeah. No, absolutely.
I thought it was a lot of fun. So from teacher to operator, how did your background in education influence how you now teach others to evaluate risk and opportunity?
So as a teacher, one thing I wanted to touch on is for people who are transitioning or adding this real estate as an aside to a career in education or social services, you really have a lot of transferable skills that people don't necessarily give themselves credit for. When I talk to other teachers, social services people, even people in administration, teachers are very good project managers. We're seeing a curriculum through from beginning to end. We tend to be good at dealing with people, good at conflict resolution, particularly if you're a high school teacher. And a lot of those skills translate over very nicely into the real estate world. As a teacher myself, one thing that I really enjoyed doing was trying to take something that was complicated, like a math concept, and break it down into simple terms that made it relatable, relate it back to something people understand, make it a little bit less abstract. And that's another thing that I get to do as part of Jumpstart Lehigh Valley, is I get to relate just a little, not too much math, but just like a little bit, back to things that people understand in terms of common sense and in terms of dollars in and dollars out. So as a teacher for Jumpstart Germantown, my goal is to help investors think critically, not just chase trends, focus on structuring analysis, focus on sustainable ownership, and focus on becoming community-rooted investors.
So final advice from you. If a brand new investor listening today wants to avoid blowing up their finances, what is the first disciplined step they should take this month?
So just to give some ideas of, again, very concrete actionable steps, I would say go out there and analyze 5 or 10 deals. Again, these could be properties that you're finding actually for sale, or you can check out our simulation game. And check out our pro formas, the sample pro forma I already have up, the one Joe is going to give me that I'll post. You can try running those pro formas on your deals and just see. You don't have to buy anything, but just see, the experience of running those pro formas. Make sure to write down your investment criteria. Your goals for a property that this is what it looks like. When I find a property that looks like this, I will buy it. That's what you want to write down as your investment criteria. So it does help to know exactly what you're looking for in order to find it.
Well, I'm going to tell you some funny on Facebook. I'm only connected to 2 teachers that had taught me over the last X amount of years. One of them is my history teacher, and one of them is my math teacher.
That's because math teachers are awesome. Yeah,
just letting you know.
Yeah.
I'm only connected to 2. Okay, and one is my math teacher from high school.
Nice.
She thought I was slightly had a handicap back in the day, but that's okay. I was terrible in math in high school.
I
aced it all through college.
Yeah.
I just needed a different environment, and then the light bulb went off.
Yeah.
Yeah.
Sometimes it's that way. I almost failed Algebra 1 in middle school.
I
went on to have a math degree and become a math teacher.
Yeah.
So sometimes it's not you; it's just the circumstances.
The circumstance and environment.
Yeah.
I believe, and I think that's the same thing with real estate. Sometimes you just have to shift the neighborhood, shift the area. I think Lehigh Valley has some room. You just got to be careful, like anywhere else. I think you have a better grade of talent up there now than when I was up there owning real estate. So I think you have good management presence, you got good contractors, you got good mentors, you got good meetups to go to and things of that nature. And I promise you beer at the next interview that we have at Fegley's Bethlehem Brew Works. So maybe a shot, just do a couple shots during the discussion. So how do we find Nancy O'Brien in Jumpstart Lehigh Valley?
So if you are in the Lehigh Valley, please visit jumpstartlehighvalley.org. That is .org, not .com. Now, if you are interested in Jumpstart but you're not in the Lehigh Valley, if you go to gojumpstart.org, there's a list you can pull up of all the different Jumpstarts nationally. If you wanted to try out our deal simulation app, that's at DealBreak.com. It is a work in progress, and I would welcome feedback on it, how people are finding it, if it's too easy, too hard, is it easy to navigate, that kind of thing. It's a beta version, I would say, at this point. And then you can reach me anytime by emailing me, Nancy at jumpstartlehighvalley.org.
Nancy, it's a pleasure having you here. We've been working on this, going back and forth the last couple of weeks, and discussions. You're advertising our events now that you're speaking at, which I'm excited about. When we have you at the second Wednesday as well at Fegley's Bethlehem Brew Works live.
Yep.
Yeah, we're in the fishbowl, so it's a controlled room, and we'll have beer and liquor for you.
Okay.
So
Perfect.
We'll have an Uber take you home.
Okay.
I appreciate you taking the time today on Saturday with us at the Creative Birth Strategies podcast. But we'll definitely get out those performer worksheets that lenders actually use. And I don't think anybody's willing to probably provide that, but I'm more than happy to do that for you.
I appreciate it.
Yeah.
Thank you so much. This was really fun.
I hope you enjoyed it. A lot of nerve-wracking stuff. It was a lot of fun. I want to thank everybody tuning into our second part series of 3 this morning with Nancy O'Brien at Jumpstart Lehigh Valley. I want to thank Mr. Yarno Perkins of Perkintech, my co-founder of the podcast. You can find us at creativebirthstrategies.com, and we'll be back just a little bit with our next discussion on contract clauses every investor should know. We have Natalie coming in from Nachmanson Law. I'll see you soon. Have a great day, guys.